For the new people wey just dey join my life, where I never discuss where I never discuss market structure. So I'm going to start with market structure tonight. Now let me even check. Okay, now I'm going to talk about market structure tonight. Now I'm going to talk about market structure. So if you are new here, you are welcome, and I hope you are ready to learn. I go explain after this class. I want to talk about market structure. I want to talk about basics of market structure. Basics of market structure. It's very important. I don't tell una say I go talk about basics of market structure this week. So if you are new here, you are welcome. I'm going to talk about basics of market structure. And if this is your first time, make sure you join my Telegram channel, join my YouTube, and join my X. Join my X. Make sure you join my X. And guys, I need new moderators. I'll be choosing new moderators today. Maybe after this class, I need to select new moderators. I'll be selecting new moderators after this class. I know if you give anyhow person my moderator now, e gats be person wey dey join my class very well. E gats be person wey dey join my class very well. Now let me select new moderators. Where are my old ones? Okay. I need new moderators. So I'll be giving my moderators when I'm done with this class, right? I'll be giving my moderators. And I need people wey dey very active. Oh. I need pick me up. Osate, Oya send request now. Okay, I sent you request. I sent you request. Please, you have to be fast because I have this class. I need to like complete this class and move to the next step. Guys,
Good
please keep
evening.
tapping on your screen. Good evening. What's up?
I'm fine, sir. I
Yeah.
was just saying you should pick me as your moderator. I don't have a question.
Okay. No problem
Yeah.
then. No problem. I'm going to pick you as my moderator.
All right, no, be glad.
Yeah. So when I'm done, and I need one more, I think Big Dammy is going to fit. I need one more or two more, Jari. Also, Atei and Big Dammy. So you remain one person. When I don't finish, I go check the last person where I want to choose. So guys, tap on your screen. Now, active people I need. Okay, guys, let's talk about market structure. Oh, like I always say, right? Market structure is basically the way market moves on the chart. Market structure is basically, you see why I want to go back to this? Why I want to go back to this class? Because this is the class I started this live with. I started with market structure. Now, for the new people that just joined me and I never discussed market structure, now I want to go back to the day one, which is December 1st, 2025. Now, let's go back to that day. This one too long. Now, this is the meaning of market structure, right? Market structure is basically the way price moves on the chart. And what do I mean by market structure? What do I mean by market structure? Market structure is everything you are seeing on this chart. You can see the market going up, going down, consolidating, going up, going down, going up, going down. Now, everything you see on this chart, right? Everything you see on this chart, right? That is market structure. You can see your market structure from any time frame, 1 minute, 1 minute, 3 minutes, 5 minutes, 15, 30, any minute you see on this, like on this trading view, right? You can find your market structure in any time frame. And market structure is basically the way price moves on the chart. Now, market structure doesn't really have much. We are still going to talk about like the importance of market structure, why you need to understand market structure. But for the start, market structure is basically the way price moves on the chart. You see all these movement in this chart. You see all these movement in this chart. Hello? Eh? Market structure is basically the way price moves on the chart. You see everything that is happening in this chart. You see everything that is happening in this chart. Now, this everything here is market structure. Everything here is market structure. Everything here is market structure. Everything you can see here, right? Everything you can see here is market structure. Everything you can see here is market structure. Now, market structure is basically the way price moves on the chart. Now, okay. I need see here. I need see here. Market structure is basically the way price moves on the chart. Guys, while I do my explanation, I need you to tap on your screen. Guys, tap on your screen while I like explain this thing. Tap on your screen. Guys, tap on your screen. Now, market structure is basically the way price moves on the chart. And in this market structure, right? In this market structure, we have three different ways price moves on the chart. We have three different ways price moves on the chart. Either the price moves at uptrend, or price moves at downtrend, or the price moves as ranging. Now, this is the three different ways. This is the three different ways, right? This is the three different ways. This is the three different ways, right? This is the three different ways this price moves on this chart. This is the three different ways. Either the market is moving as uptrend, or the market is moving as downtrend, or the market is moving as ranging, which is sideways. And what do I mean by when market is moving as uptrend? What do I mean by when market is moving as uptrend? Now, uptrend simply means when market is creating highs, when market is creating higher highs. Now, uptrend is the series of higher highs, higher lows, higher highs, higher lows. Now, that is the meaning of uptrend. Uptrend is the series of higher highs, higher lows, higher highs, higher lows, higher highs. So that is the meaning of uptrend. What is the meaning of downtrend? Downtrend is when the market is making series of highs, lower low, lower high, lower low, lower high, lower low, lower high. Now, this is an example of downtrend. This is an example of uptrend. Now, this is an example of ranging market. Now, when market is moving from point A to point B, back to point A, back to point B, back to point A, back to point B. Now, that is an example of a ranging market. Guys, you can see the difference between these three structures, right? Now, this is everything we pay attention to when it comes to trading, structure, liquidity, and point of interest. We pay attention to the structure part, which is either the market is moving uptrend or downtrend. But once you learn this structured liquidity and point of interest, then you are going to understand how to trade a ranging market. Because you see, this ranging market is different from trading a trending market. Now, as a beginner, right, you should pay attention, you should pay more attention to your trending market. And what do I mean by trending market? Trending market can be uptrend or it can be a downtrend. Trending market can be an uptrend or it can be a downtrend. And in a trending market, we have, if it is an uptrend, right, it is when the market is making series of higher highs, higher lows, higher highs, higher lows. Now, before you confirm, now guys, listen to this. Before you confirm that the market is an uptrend, at least the market should give you two higher lows. At least the market should give you two higher lows. The market should give you two higher lows. That's when you can confirm, okay, this market is uptrend, right? That's when you can confirm this market is uptrend. Now, if the market only give you something like this, right, low and a break, now this doesn't mean after the market break this high, now this doesn't mean that this market is uptrend. Why? Because you haven't seen at least two higher lows until the market give you something like this and break structure again. Then when the market is pulling back here, then you can still know that the market has given you two consecutive higher lows. Now, where is your first higher low? Where is your high? High one. Oh, this is your higher low. Then that is the second one. This is 1, 2. This is 1, 2. And you can also count this as your higher low. You can also count this as your higher low. It depends on the market scenario or how the market is reacting. But for you to be on the safe side, you need to consider this 1, 2. So at least you should see 2 or more higher lows in the market. Guys, do you understand? Do you understand this structure part? Okay, good. Now, the same thing goes if the market is downtrend, right? At least you should see 2 consecutive lower highs. And what do I mean by lower high? If the market give you low, then the market is going to give you lower high, then lower low, then lower high. Then what are you going to expect next after this lower high? You are going to expect lower low. Now, that is going to show you that this market is bearish. This market is bearish. That is going to show you that the market is bearish. Now, let's look for an example of an uptrend. Let's look for an example of an uptrend market. Now, you can see the market rejecting from here, and the market did what? And the market did what? Give us a new high and a new low. Then the moment market break this high, the market gave us what? Higher high, higher low. Then what are you expecting next from this high? What are you expecting next from this low? You are expecting a new higher high. Then the market did what? Gave us a new higher low. So when this market gave you a new higher low, what are you expecting from this higher low? What are you expecting from this higher low? Higher high. So you are expecting higher highs. So that is how market structure works. And what are you expecting? Since this market is bullish right now, what are you expecting next? You are expecting higher low to give you what? Higher high. So now that is how market structure works. Now let me look for a downtrend example. Let me use BTC for a downtrend example. Guys, tap on your screen. Guys, tap on. Let's get 200k likes. Let's get 200k likes. Let's get 200k likes. Tap on your screen. Now, this is an example of downtrend, right? Once the market gave you what? This high, and the market gave you what? Low. Then the market did what? Give you a lower high. Then what are you expecting next from this lower high? You are expecting a lower low. What are you expecting next? Lower high. Then what are you expecting again? Lower low. So that is an example. That is an example of a downtrend, and that is an example of uptrend, right? Now let's look for a ranging market. When market is moving sideways, Now, this is also an example of the market ranging. You can see the market ranging like going to from point A to point B, back to point A, back to point B, before the market break above this high. Before the market break above this high. Now, I'm going to explain how to trade like ranging market later, but I need you to understand the structure part of this strategy. You need to understand the structure part of this strategy. Now, that is the meaning of market structure. Let's go to the next step. Okay, now GPP JPY. Okay, now let's go to the next step. In this next step, guys, we have what we call what? We have our break of structure and we have our market structure shift. Now let me talk about this break of structure. Now, guys, now let me talk about this break of structure, right? This break of structure. Now, let's talk about this break of structure. Break of structure simply means when market is breaking key levels, right? And what do I mean? And it's maintaining its same direction. Break of structure simply means when market is breaking its key level. It's when market is breaking key levels, right? And it's maintaining its same direction. You can see what I'm saying. Break of structure simply means when market is breaking key levels and it is maintaining its same direction. Now, where do we look for this break of structure? You can only look for this break of structure in a trending market. You see this break of structure or market structure shift. You can only find them. You can only find them in a trending market. Now, how can you look for this? How can you look for this in a trending market? Now, if the market is bullish, right, or bearish, now that means either the market is going uptrend or downtrend. And if the market is going uptrend, it will keep doing what? It will keep breaking key levels. And where are the key levels? The key levels are the past high formed in this market. Now, if once you confirm your higher high, what are you expecting next? Higher low. Then what are you expecting from this higher low, guys? What are you expecting from this higher low in an uptrend? Yes, you are expecting a new higher high. Yes, you are expecting higher high. Then the moment this market break this high now, the moment this market break this high now, that is your break of structure. That is called your break of structure. Why? Because market is breaking key levels and it's maintaining the same direction. Its same direction. Market is breaking key levels and it's maintaining its same direction. Now, what are you expecting next from this higher low? You are expecting a new higher high. Now, the moment market break this high again, now you still confirm that this market is still bullish. This market is still bullish. Why? Because the market is maintaining its same direction and breaking key levels. The market is breaking key levels in its same direction. Now, that is the meaning of break of structure. Now, let me give you an example in a downtrend. Then, if you have this high and the market break this low now, the moment this market break this low now, this market has broken a key level, right? This market has broken a key level and the market has given you lower low. Then what are you expecting from this lower low? You are expecting a new lower high. You are expecting a new lower high. Then after this lower high, what are you expecting next? You are expecting lower low. Now, the moment market break this level, the moment market break this key level now that is your break of structure. You are going to understand that this market is still bearish. This market is breaking key levels in its same direction. In its same, like, you need to understand what break of structure really means. When market is breaking key levels in its same direction, in its same direction. In its same direction. Now, the moment you confirm another lower high, what are you going to expect? You are going to expect lower low. The moment you confirm another lower high, you are going to expect lower low. Why? Because you understand that this market is bearish. And what should you be looking for? You are looking for break of structure. So the market can keep breaking the key levels. Keep breaking the key levels in its same direction. Guys, so do you understand this break of structure? Can I move forward? Do you understand the break of structure? Can I move forward? Guys, please make sure you tap on your screen. Make sure you tap on your screen. Make sure you tap on your screen. If you are not typing, make sure you tap on your screen. Okay. Since you guys understand, now let's continue the class. Now let's go to our market structure shift. Now let's go to this market structure shift. Now, market structure shift simply means a trend is about to end, right? And a new trend is about to begin. Now, market structure simply means it is an indication. Like, market structure simply means, again, it is an indication that a market trend, like a current trend, is about to end. A current trend is about to end and a new trend is about to begin. Now, that is another meaning of market structure. Market structure simply means a current trend is about to end. A current trend is about to end and a new trend is about to begin. Now, if this market is bearish, right? If this market is bearish and you hear something I called market structure shift. Now, what does it mean? What does it mean for this market? If this market is bearish and I say this market is going to shift structure, now that means a current trend is about to end and a new trend is about to begin. If a new trend is about to begin, now which trend is about to begin? If this market is downtrend, which one is about to begin? Now, which one is about to begin, guys? Which one is about to begin? I'm going to answer your questions. Yes. Uptrend. Yes. Now, a new trend is about to begin, which is uptrend. Now, the moment market break this high you do what? You confirm your market structure. You confirm your market structure shift. The moment break this high, the moment this market break this high, you confirm your market structure shift. Now, where is your market structure shift? This is your market structure shift. And why would this be your market structure shift? Because this was the last high. Now, this high
was this last high formed in the market, and this high break this low. Now where is your market structure shift? Now this high should have this high should have been your protected high where the market shouldn't have break. Now the moment market was able to break this high, now that is going to confirm, that is going to indicate this trend is about to end and a new trend is about to begin. Now that is the meaning of your market structure shift. Now let me also give you an example when the market is uptrend. Now if you are having higher high, higher low, higher high, higher low, higher high, and the market do what? And the market like break this low. Now this low should have been your what? Should have been your protected low. Now but the moment market break this low, now this low is going to turn what? This low is going to turn your market structure shift. Now market structure shift, this market structure shift now it is now indicating that a trend is about to end and a new trend is about to begin. Now this market structure shift, now this one is going to indicate that a trend is about to end and a new trend is about to begin. Now that is the meaning of market structure shift. So guys, let me ask questions before I continue this class. Let me make sure you are tapping on your screen. Make sure you are tapping on your screen. And if you are not following me, make sure you are following me. If you are new here, you are welcome. I'm doing this for the new people on my channel, right? Because it's been a while I teach beginners class. It's been a while I teach beginners class. So I'm doing this for the new people on my channel. So if you are new here, you are welcome. Make sure you follow my YouTube. I've done this teaching since last year December 1st. So I don't talk about this market structure a lot of times. Now I am just here doing it again for the new people, on this channel. Because this channel is for everyone. Everyone must understand everything we are doing on this channel. So this channel is there for everybody. So that's why I'm doing this for the new people that are just joining this channel. So you are welcome. You are welcome. And make sure you join my Telegram, join my YouTube, and follow me on X. You can also use the link on my bio. You can use the link on my bio. Now, if you want to start Forex trading, this is like a very simple and direct way to like give you edge on what you are going to face, on what you are going to learn. So that's what I'm doing for you. Now, guys, do you understand this market structure shift? Do you understand this market structure shift? Priceless gift. What do you not understand? Priceless gift. What do you not understand? What do you not understand? Priceless gift. What do you not understand? Priceless gift. What do you not understand? What do you not understand? Though I am going to I want to move forward. Now, this market structure shift is about to end. I am about to end this class. This market structure shift. This market structure class. Okay, since no one asked a question, now in this strategy, right? In this strategy, we call structure, liquidity, and point of interest. You know the key things. Let me tell you the key things. The key things what we look out for is the break of structure or market structure shift. You see, in this strategy, in this SLP strategy, the key things you want to look out for, is the break of structure or your market structure shift. Now, that is the only two things you want to look for. Right? That is the only two things you want to look for. That is the only two things you want to look for. Now, let me give you an example of a market structure shift. Guys, now pay attention to this example of market structure shift.
Now, pay attention to what this market was doing, right? This market was like bullish, giving you lower, higher low, then higher high. Then the market created what? Higher low. Then the market did what? The market did what? Higher high. Now, this should have been your protected high. Now, this low, no, this low now should have been your protected low. Now, this low now should have been your protected low. Even though the market wants to retrace, it shouldn't have break below this low. Now, the moment market break this low, and closed below this low. Now, where is your market structure shift? This is your market structure shift. The moment market break this low and closed below that low, the moment market break this low and closed below this low, you can see the candle closing below this low. Now, that is your market structure shift. That is your market structure shift. This is your market structure shift, because that low should have been protected. That low should have been a protected low. Now, you can see the market shifting structure, and the market started selling immediately. You can see from a bullish trend to a bearish trend. Now, let me give you another example, right? Let me give you another good example. I can see many examples from gold. Now, let's look for good examples. We clear very well, we sharp. Guys, tap on your screen. Tap on your screen. Guys, tap on your screen. Guys, tap on your screen. Tap on your screen too. Tap on your screen. Make sure you are tapping on your screen. Now, let's look for more examples of market structure shifts, guys. Let me show you guys more examples of market structure shifts, right? Now, yes. Okay, I never reached there. I want to look for the one we clear very well. We clear past DSTV. Now, guys, now pay attention to this structure shift we have here. Now, what can we see? What can we see here? Guys, without even telling you guys, what can we see the market is doing, right? What can we see the market is doing? What can we see the market is doing? Now, guys, what can we see the market is doing? The market is what? The market is what? Is the market bullish or bearish? Lower low, downtrend. Nice. Nice, guys. Nice. Wait, I want to know something here. Now you can see the market is bearish, right, guys? Now you can see the market is bearish. Now, the moment you understand now this market is bearish, right? Now, how do you understand without even using your trend line? You can understand that this market is doing what? Giving you lower low, lower high. Now you can see these markets giving you what? Lower low, lower high, lower low, lower high, lower low, lower high. Now, when markets get to this, when markets created this high now, what do you have here? This high should have been your protected high. Now, what are you expecting the market to do? You are expecting the market to give you a new lower low. But you can see what the market did here. The market was unable to give you lower low. Why? Because the market was unable to break below this low and closed below it. Now, since market was unable to break below this low and closed below it, now the market only gave you a liquidity sweep, and the market did what? From this low now, the market did what? Shifted structure to the opposite side. Now, where is your market structure shift? This is your market structure shift, guys. This is your market structure shift. That is your market structure shift. This is your market structure shift. Now, what was this market doing? This market was breaking structure. This market was breaking structure. Yeah. The market broke structure here. The market broke structure here too. The market broke structure here. The market broke structure here, broke structure here. Now, do you understand the meaning of break of structure and market structure shift? Now, with this little explanation, I believe you all understand market structure shift and break of structure. For my beginners, now you can see the way I marked it out, right? You can see the way I marked it out. You can see the way I marked it out. That's the way you can also mark it out on your chart. Guys, tap on your screen. Tap on your screen. Tap on your screen too. You can see the way I marked it out. That is also the way you can mark it out. That is also the way you can mark it out. I will still go to my advanced class. Now, let's just finish this beginners class. Now, what else do I want to talk about? What else do I want to talk about in this beginners class? And in this beginners class, I want you guys to understand that like before you even start forex, right? Market structure is something you need to like understand very well. Market structure is something you need to understand very well because it is very important for you to understand what market structure is. Now, there will be a day that I'm going to talk about the advanced market structure. You see, everything I'm teaching you now is just the basics of market structure. There will be a day I'm going to talk about advanced market structure. I'm going to talk about advanced market structure. Now, what I just explained now is just the basics of market structure. That is not an advanced market structure. I am not talking about point of interest today. You can ask me any question about market structure. Now, let's talk about one after the other. You don't need to rush yourself. You don't need to rush yourself. Let's do it one after the other. Let's do it one after the other. So I'm just talking about the basics of market structure. That is all. That is all. And this is the advanced market structure. This is the advanced market structure. If you have something like this, you are going to have something like this, right? You are going to have a break and what? An inducement, a continuation, and like this is the way markets really move. Now, they are going to tell you that the market is only moving like this by giving you break of structure. That is the basics way the market structure move. Now, this is the advanced way. This is the advanced way this market structure move. And this advanced way is what we use as our strategy. This advanced way is what we use as our strategy. So that is what we use as our strategy. This advanced way. Now, this is the basics and that is the advanced. So I believe you guys understand the difference between the basics and advanced. So you guys understand the difference between the basics and advanced. What is the best time frame to spot market structure? I told you market structure is basically the way price moves on the chart. You can spot market structure on any time frame. You can spot market structure on any time frame, maybe 1 minute, 3 minutes, but you just like need to understand how time frame works. But when we are talking about the basics, you can use anything. You can use any time frame to spot your market structure. Once we are talking about the market, the strategy too, you can also work with any time frame. Because we all work with all different time frames. We all work with all time frames, especially this strategy. We work with 3 minutes, 5 minutes, 15, 30, 45, 1 hour, 2 hour, 3 hour, 4 hour daily time frame. So you need to understand how you can like work with everything you have there. You need to understand how you can work with everything you have there. So guys, I'm going to explain how I was able to get this GPP JPY trade. Yes, yes, but you can no, it's not only about higher time frame, right? You can also work with different time frame. Now, guys, I am about to explain how I was able to get this GPP GPY. This GPP GPY. Now, let's start. Let's start. Should I start the explanation or I should put it later? Should I start the explanation? Ah, okay, guys, let me get to 70k likes first. I don't explain, give una explain. Me say if I don't tire, but while like let me just rest my head for like few seconds so I can start the explanation. Let me rest my head because you know dey easy. I never even rest. As I dey come from gym, I just come on live. I rest for few minutes. Then I come on live because I never come on live since on Sunday. On Saturday I come on live last. Na Saturday. Guys, tap on your screen. 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 Let's get to 70k likes. My goal tonight is 100k likes. Guys, tap on your screen. Tap on your screen. Like everyone, double tap on your screen. Everyone, double tap on your screen. Double tap on your screen. Then when I'm close to like we don't do 60k likes already. Double tap on your screen. Let me explain how I was able to get this straight because you know, guys, I will keep doing this for you. So in the next few months now, I believe I should have more than 100 profitable students. If you guys are serious, it won't be up to 3 months. But let's just wait and see. It is not about only amen. It is about the work I'm putting in. See, it's just left for people to follow my footsteps. Now, it's left for them to follow my footsteps if they want to be like me. Now, why they always tell, now, you see, now I have a profitable trader already, and this guy is not even in my advanced class, but he learned from my life. Oh, Faithful isn't in my advanced class, and he learned from my life. He is profitable already. You can see, he shall no go lie say he dey profitable because being profitable no dey easy. So I'm Faithful na person wey dey always ask me question on this life. He learned from my life. Guys, I want you guys to keep double tapping. Now let's start this explanation on how I was able to get this straight. Now, after I confirm, now let's start. Guys, after I confirm that the market is like bullish, and how do I confirm the market is bullish? Next question. I need to understand that there is a market structure shift before these markets can turn bullish. Now, let's pay attention to what the market was doing. The market was giving us lower low, lower high. Lower low, lower high. Then we are expecting lower low, lower high, lower low. So we are expecting a new lower low, but look at what the market did here. Look at what the market did at this point. You can see this low now. You can see this low. This low now. This low was unable. Now, this low was unable to close below this low. Now, this low was unable to. Guys, just tap on your screen. Guys, tap on your screen. Oh, guys, tap on your screen. I beg you. Guys, this low now, this high, you see this high I have here. This high was unable to create new low. Then the moment this high was unable to create new low, now you can see the high rejecting. You can see this high rejecting from here. After this high created this low, it rejected from here and created this high. Now, since market don't create this high, what should we still expect? We are expecting the market to create a new lower low, right? Because the market is still bearish. Now, this market was unable to create a new lower low. Then the market just did low and do what? Shifted structure. Now, since I confirm my market structure shift, what am I going to look for next? I'm going to look for my inducement. And where is the valid inducement? This is the valid inducement, the continuation, and this is the point of interest to enter the trade, which is our other block point of interest. Now, once I confirm that this is my other block point of interest, right? I understand that this market is reacting from here. And where is my profit target for this current reaction from here?
This is where I target for me to take profit. Now, this is the high I am going to target because this is the nearest draw liquidity I have on this market. Now, since this market is reacting from this other block, right? This market is reacting from this other block. And where am I expecting the market to where am I expecting to take my take profit? Like this, let me show you something now. If you have something like this, then you can understand that your nearest drawn liquidity where you are expecting to take your profit is this high. Now, this was the high I expect I can, like, I'm taking my take profit because that is nearest drawn liquidity. But when you can see now, let's go to 30 minutes because I analyzed this thing when we were doing our directional bias. Now, I analyzed this thing where we were doing our directional bias. After our market structure shift, I confirmed my what? I confirmed my inducement. I confirmed my what? I confirmed my inducement. And I confirmed my other block point of interest. Now, since I understand that this market is going to buy from this low, this market is going to buy from this low to this high. Since I understand that, then what would I be looking for? Now, without telling you guys, you need to tell me what I will be looking for till the market get to this high. What would I be looking for, guys? Please tap on your screen if you are not testing. If you are not sending any comments. Till the market get to this high, what would I be looking for? Buys, guys. I will keep looking for buys. I will keep looking for my continuation pattern. That is what I'm going to look for. Since I've missed this other block point of interest, now what would I be looking for? I will be looking for buys. Now, if I want to look for buys, how do I look for buys? Now, since I understand that this is 30-minute time frame, but you see what the market was doing, I have nothing much to see on this 30-minute time frame. And I did what? I scaled down to the lower time frame. Which is 15-minute time frame. Guys, I used 15-minute time frame for this strategy. Now, this is when the market opened, right? It was around 12 a.m. Now, this is when the market opened. Now, the moment this market opened, this market was buying, right? This market was buying, and the market gave us a new low. This is just like a new high and a new low. Then what are you expecting from this low? You are expecting the market to break this high and break this high. Now, pay attention to what I did here. Now, the moment market from this low, now, the moment market reacted from this breaker block. Now, my first reaction is from this other block. My second reaction is from this breaker block. Now, the moment market reacted from this breaker block and gave us our continuation pattern. Guys, what is our continuation pattern? Tell me, I beg. What is our continuation pattern? Guys, what is our continuation pattern? I know they hear anything. Double break of structure. Now, where is your double break of structure? The market break this high, one, and the market break this high. Now, the moment this candle that break this high closed, where is the candle? This is the candle. The moment this candle closed, right? The moment this candle closed, I will do what? I will look for my inducement. I told you guys, the inducement can be the first valid pullback, and it can be multiple pullback or multiple candles. Now, where is the first valid I can find here? Now, this is the first valid pullback I can find here. And why? And is this valid in this? Is this inducement now? Is it valid? Yes, this inducement is valid. Now, since this inducement is valid, where am I going to use as my point of interest? I am going to use this breaker block you see here this week. This breaker block you see here, that is my point of interest. This is my point of interest. That is where I'm going to take my buy from. Since I understand that this is where I'm going to take my buy from, now I confirm my double break of structure. I confirm my inducement, and I confirm my breaker block point of interest. DBOS, my inducement, and I confirm my what? Breaker block point of interest. Is, guys, now, as I confirm that thing, now, can you see this thing? That this thing is actually what I taught you guys. I don't teach you guys this thing a lot of times. I don't teach you guys this thing. So I'm not adding anything. I'm not adding anything. I'm not adding anything. I'm not adding anything to this thing. I'm not adding anything to this thing. I'm not adding anything. So this thing is the same thing I've been teaching you guys for over 3 months. For over 3 months. If you see, what thing I dey do for you, sef, if you go pay for mentorship class, your class go don expire. You go still do it like coconut head. You go still do it like coconut head. You no go understand wetin I dey teach you. Why? Why? Say you still wan make 2026 pass you by without being profitable. If you are too lazy to learn alone. But the week is longer than the body, then you should understand the market is volatile. Now, I told you, you have to use common sense when you are trading Forex. You have to use common sense, because if you know they use common sense, the common sense go use you. If you understand that this market is volatile, why would you wait for the market to get to the body? Why would you wait? See, when I analyze this market, right? Look at when I analyze this market. The market never reach anywhere. If you know as I did, like, watch this market back to back. Guys, when this market was creating new highs, I pay attention to this market. I was watching it back to back. I was watching this market back to back. You can see I didn't mark out from the body. Why? Because the market is volatile. You go do it like coconut head. You no go know when to use your common sense. So guys, with this little explanation, I hope you guys have understood how I do trade. Now, this is how I trade, right? Except from your strategy, right? Except from your strategy. For you to become profitable, right? For you to become profitable, it depends on the kind of person you are. It depends on the kind of person you are for you to be profitable. Like, do you have the make I no use common sense. Oh, do you have the medulla oblongata? Do you have the medulla oblongata to become profitable? Let me not use common sense. Do you have the medulla oblongata to become profitable? Because if you want to become profitable, this thing no dey easy. This thing, you get some kind of place where be say now OT you go use. You no go even follow the market. Do you have the medulla oblongata to become profitable? Do you have the medulla oblongata to become profitable? Guys, see, if you want to become profitable, you need to be which one I feel use? Which one I feel use? You need to be direct. You need to be fast. You need to my guys, e get many things where I want to talk. E be like say I go open my dictionary. So I feel find some big grammars. If I feel find those big grammars, then you guys, you are going to collect. If I feel find these big grammars, if I feel find and finish, una go collect from my hand. Make I first go carry my dictionary. Because for you to become profitable and for you to understand that when you should not mistrade. Now, guys, I don't remember something. Right? Now, let's talk about psychology. I noticed something that is affecting forex traders. Now, for example, you can have a plan for a week that you are going to trade 4 times in this week. But if you lose the first 2 trades, you go start to dey panic. Why? Now, if you lose the first 2 trades, why you dey panic? When you have a plan that you are going to take 4 trades, you still have 2 more chances. Now, why are you scared to take your strategy again? Now, why are you scared? Why are you scared to look for that your setup and to take that your setup? Why are you still scared? You are going to have a plan by taking 4 or 5 trades in a day. Your confidence go reduce. Now, why that confidence? Why they reduce? Why that confidence now? Why that confidence they reduce? If you have a plan already, since you have a plan already, why are you giving up on that plan? You don't have to give up on that plan, guys. You don't have to give up. I find this thing so irritating that, okay, now that means you are not confident. You don't, like, how if you are not confident, then you are going to see some people who are profitable, right? Now they understand what they are doing. They understand they are taking risk. Each trade they are taking risk. Why can't you take risk? The moment you are taking the risk, the moment you sign up to become to become a forex trader, now you are signing up to, like, high risk, because forex investment is a high risk investment. Forex is just like an investment. Let me tell you something now. Forex is just like an investment, and forex is a full-time job, right? Forex is an investment and a full-time job. But you see this forex is a high risk investment, because why? The forex is going to give you high reward. High reward. If you are risking $100 in a trade, you can see 10. You can see, let me just say, 1:10 is just $1,000. If you risk $100 in 1:10, you are going to get 10 times 10 of your money back. Which investment company fit give you 1,000% on your capital? It's not possible now. It's not possible now. It's not possible. Which investment company fit give you 100%? Highest, they are going to give you 16%. 16. Gen Z, Ogun wan kill you. Why you dey send me request now? Make this be your lifetime where you go send me request. Who follow you? They do that one for year. Now, guys, forex is a high risk investment, right? Now, for you that you are, like, having high risk investment, just know that high risk investment, then you are open to losses. You are open to losses. The moment you sign up for that losses, then you should stop being scared. Stop being a fowl, bro. Now fowl they fear. Fowl wey just born, say fowl wey carry pikin for back, no dey fear. Now, if I say you be fowl, how you go feel? Na only fowl dey fear. Now, are you a fowl? Na fowl wey carry pikin sef no dey fear, because if you near him pikin, the fowl go pursue you. Oh yeah, I don calm. So this thing dey if you know say you